us, we have Kunal Shah, Head of Commodities Research at Nirmal Bank, to help us understand how the commodity market is expected to shape up in today's session. Kunal, over equity markets right now, it's the last half an hour of trade which actually saw this kind of volatility, and there was a potential that probably we could end at neutral levels, but we did see a major slump that did come in the last 30 minutes of trade. How is this going to actually percolate for the commodities market now?
I think there is a fear right now that whatever has been happening across the globe with the context of coronavirus, it seems to be weighing down on the industrial commodity. We see the base metal, the steel futures in China, and including if you look at the overall industrial commodities, they have been under a constant pressure, because the fact is that now the question is about inventories. What is going to happen if this kind of lockdown? So for example, January and February, these 2 months are locked down. So these 2 months the inventory are accumulated. So whether the demand is going to rise exponentially after things get stabilized, if it doesn't, then too it is not going to make up for the loss of the demand what we've seen in last 2 months in China. So it seems that this complex, the industrial commodities complex itself, is caught in a bear grip, and we don't see any meaningful recovery. Sell the rallies is what we recommend. So copper again, March contract around 426, 427, good levels to go short. Again it can go down and test levels of 421 to 420. So no respite expected in industrial commodities. Even with regards to crude oil, crude oil made a low of $48.60 for the WTI. And if the thing doesn't improve, I think we can see even oil can breach levels of $48, and on MCX it well can test levels of 3480 to 3500. So I believe that we are going to see sell-off continuing in industrial commodities pack.
Right, the sell-off will continue in industrial commodities. Very interestingly, you mentioned about crude oil as well. We are way below that $50 per barrel mark right now. You have the OPEC meeting in Vienna on the 5th and the 6th of March as well. Now, if Russia does not give support on that front in terms of production cuts, do you think that will create further pressure, or what will that be the kind of move that we could expect?
Any which way, even if OPEC cut the production right now, it seems that oil market, because of this crisis, will be in the surplus of 1 million barrels per day, which was earlier in a deficit of 0.3 million barrels per day. So already 1.3 million barrels of demand is being destructed because of the ongoing crisis. So I don't think so that OPEC can afford to cut production to the tune of 1 million or 1.5 million barrels. Not possible. They've already cut production by more than 2.5, 3 million barrels over the last 2 to 3 years. So it doesn't make sense for them. So I think till we get any good news on the global macro front, I think there is a chance that oil well can break $48 and hover around $46.
Yeah, but do you see $40 in the near term anywhere soon?
Well, it's very difficult to forecast considering the fact that the bad news keep coming, and it's just the sentiment more than the demand and supply. I believe that the sentiments have changed, and it will take really something greater than just a small sigh of relief, which will change the sentiment. So any positive news on the coronavirus or made from the global economic point of view for a couple of days, I think that can change the sentiment. So I think sentiment is very fragile right now, and hence there is further selling which can be expected in oil futures.
Right. If you're talking about oil, let me just quickly trickle in a question on the currency as well, because again, the moment oil dips, there will be some bit of support that will come in for the Indian rupee as well. Then what's the trend looking like on the Indian rupee?
Well, Indian rupee has been acting very strength. We've seen strength in yesterday's trade, today's trade also. If oil declines, yes, it is definitely bullish for rupee. But if there is a serious risk aversion in the global markets, even rupee won't be spared. Okay. So I believe that for the March contract, rupee should not go below 71.50. And if things are really stabilizing, then you well can see again rupee March contract trading at 70 to 20. So if things are not settling down, then rupee will definitely weaken further.
Right. And very lastly, any strategy from the precious metal side, because these are the safe havens right now?
they continue to remain safe haven, and I believe that gold still looks attractive. 42,400 one should go long. Stop loss should be placed at 42,200 and expect prices to test levels of 42,850.
Right. All right, Kunal. Thank you for getting us that view. So that's a view coming in on the Indian rupee as well as strategies for the day that you could be following on the base metal as well as the precious metal side. Thanks for watching.